China and Japan are drastically dropping their U.S. Treasury holdings. Ah, we should be worried. Oh my goodness, the world is falling apart. The U.S. dollar is going to decline. Ah, hair on fire. Dude, it's so stupid. So check this. Dude, I used to fall for this stuff, many years ago, but it wasn't that many years ago. It's just don't be like me today. I'm going to stop you from your worry, incessant worry about the decline of the U.S. dollar, the decline of the United States empire. Now, there is a reason for decline, and it's not because of this, but I'll share it with you here in a second. All right, right here. I actually like these guys. I don't know who the hell they are. I don't know how I started following them, but I'm on Facebook with these guys. Right here, Japan and China's share of U.S. Treasury holdings fall as the UK rises. That's of interest. But look, here's Japan in blue. And you can see they had 40% of U.S. Treasury holdings in 2003 or something like that. That's pretty interesting. I don't know if that's actually true. But anyway, we'll come. U.S. Department of Treasury. All right, interesting. So they had 40% of U.S. Treasuries, and now they're down to 13%. Oh my goodness, they're obviously concerned about the U.S. dollar. Here's China in the red, because commie red, and they're down to 7.4%, even though they had 30% in 2012. And here's the UK, and the UK is just done for, and they're done. So anyway, they're at, 9.4? Yeah, so anyway. So we take 13 plus 9 is 22 plus 8, that's 30%. 30% of these countries own, or these three countries own less than a third of U.S. Treasury debt. So the question is, who owns the other 70%? Well, you can figure it out. It's us, basically. The United States government, United States insurance companies, United States states, and all that stuff. Pensions, we own our own debt. Again, that's just a fact. So this would be an implication, would it not, that the U.S. Treasury market is falling apart, i.e., people don't want to buy treasuries. And if people don't want to buy treasuries, what happens to the price? Well, the price, if the demand falls off a cliff, the price goes down. If the price goes down, what happens to the yields? Anyone want to take a guess? Price goes down on a bond, yields go higher. And yet, let's take a gander, shall we? Oops. Well, this is odd. Here's CNBC. Oh, dude, can I just show this? All right, come on. So here's when Trump took over, right there, January of 2000, right there, January 20th. The yield on the 10-year Treasury is at 4.6. Now it's at 4.01? What the heck? What the heck? So if the demand is falling off a cliff, how in the good Lord's name could the yields be so low? Because the yields being low indicates the prices are high. In fact, we can see that. Check this out. Here's the Vanguard Intermediate Treasury Bond Fund. All right, right there, Vanguard Intermediate Treasury Index, ETF. And you can see back in January when the Trumpster took over, it was trading at $58, and now it's trading at 60. Not a huge run up, but certainly hasn't dropped. So why? You could say, well, another QE. Oh, okay. Is the M2 going through the roof? Let's take a look at M2. Let's take a look here. Here's M2, go over 10 years. That doesn't look extraordinary. We can see right here for 1 year. It's gone up from 21 trillion to 22 trillion. That's big, but it's, relatively not significant if you look at the max. Look at this. This is the max right here. And that's from 2023 to now. So basically in 1 year, the M2 hasn't really done much. It just has not. So you can't say it's attributed to all the new money being printed out there. And then we actually look at this in terms of, let's edit this and put it as a log. We're going to show you that it's just not going to look like, you're like, yeah, people are worried about that? That doesn't make any sense. So here's our M2 logged, and you can see the percentage of increase is minimal. just minimal relative to historical amounts. So anyway, the point being, what's going on? The demand for treasuries is high. That's why the yields are low. Who is buying these up? I don't know. Is there some government quantitative easing? Absolutely. I'm not going to take that much time to research this. But anytime there's a massive decline in yields, that means there's some entity buying up a bunch of treasuries. And if China and Japan are selling them, and it's not just the UK. The UK is, that's fine. But again, they only own 10% of the total, not even 10% of total outstanding treasuries anyway. So that's just not the big issue. The other issue is that there are people buying the U.S. government debt. And who are these people? Again, pensions, hedge funds, insurance companies, entities, municipalities, the government itself, absolutely. Private investors, you and me. So we're still sitting there saying, I can still lock in 10% of a 10-year treasury. Yeah, that's pretty good. I think I'll take that. Anyway, all right. Love your thoughts. Just the insanity of the worries are through the roof. Stop. All right. God bless. We'll see ya.